commentary coming in from L&T. We have Mr. Ankit Soni of Mirae Asset Sharekhan joining us on the show. And Ankit, hi, morning. Thanks so much for your time. Give us a sense of your first take on the numbers coming in from L&T. It seems like they've had a very good quarter. What's the outlook going ahead?
Good morning. Thanks for having me here. Broadly, the numbers panned out are pretty decent and in line with estimates. But there's a slight disappointment on the margins front, never though with positive surprises around order inflows and order prospects pipeline. So if you see the revenues have grown up around 16% year on year. This is on the wherein we expected for revenue growth of around 14%. So it's a slight beat on the revenue front. But on the profitability front, I mean to say it was up around 13% with a margins of 9.9%. We expected a margin of 10.2%. So the margins were broadly impacted due to execution of few energy projects which were booked in at a competitive rates, and also on the execution of high-tech manufacturing, which is the projects of high-tech manufacturing are broadly in a little earlier execution stage. So as the execution ramp up, the margins are expected to pick up. But the good point on the front is overall P&M portfolio, if you see, which has also been called as a core business for the L&T, has remained flat at 7.6%. So there's if you see the overall margins, which is coming at 9.9%, decline of 27 basis points. That was majorly due to the services segment, which is having a decline. So the net profit was up 30%. We expected a growth of around 30 to 34%, slightly up above. And the positive surprises on the ordering momentum, the quarterly order inflows at around 94,453 crores, which is strongly up by 33% year-on-year basis, is a very positive surprise and beating the estimates, street estimates. And also on the front of international orders, among that order inflows came in around 51% of total order inflows. Right. So energy business, we see a strong growth in order inflows. The company has backed one large BTG order, which led the revenue growth, which led the order inflow growth. Order inflows in the energy segment have almost doubled. And if you see the order prospects pipeline for the infra and energy segment is almost for the infra, it is almost 33-35% up. And then for the energy, even still on a strong base, company expects a huge order inflow in the energy segment also.
Right. So Ankit, what's your call on the stock now? I mean, what more does it have to do for a re-rating, and what's your target price?
So we currently have a buy rating on the stock for a target price of 4,550. And so broadly, we expect a little bit of headroom for the guidance to be revised upwards, maybe getting a further clarity after the performance of H1 financial year 26. So we expect a re-rating out there.
All right. Thank you so much, Ankit, for taking the time out and speaking with us on L&T earnings. So let's watch out for L&T as well as Asian Paints. But